Hey guys, Tom here from the Investing with Tom YouTube channel. Welcome back to the channel. If you enjoyed today's video, hit like, hit subscribe, and that way you can see future videos as well. So today's video is all about some of the potential changes that have been proposed to 13F filings. Now, if you're not familiar with 13F filings already, these are basically quarterly filings that large investors in the US have to make to the SEC. And it allows us as individual investors to see what large investors overseas are purchasing, what they're selling. And when I look at my own portfolio, there's a couple of investments in there that I have originally generated those ideas from these 13F filings. So for me personally, it is a tool in the toolbox that I use to find new investment ideas. And it's something that we've featured on the channel here a few times as well. I like to do sort of quarterly updates of all the investors that I follow really closely. And there's some pretty major changes being proposed that will potentially wipe a lot of the investors from that list. And we might not be able to see 13F filings for them any longer. So I want to get into some of the details for this, and I'm also keen to hear your thoughts on the whole thing as well. So with all that said, let's get into it. Just one final note before we do that. I've had a couple of messages about the subscriber stock picking challenge that we started at the beginning of the year. Trust me, that video is coming. I'm just sort of halfway through updating the numbers at the moment. So if you are entered in that subscriber stock picking challenge, where we had one long and one short, an update video will be coming for that very, very soon, and we'll be doing prizes just like always as well. So with all that said, let's get into some of the details of this 13F potential change. Alright, so I'm just going to be reading some notes from an article here from hedgeco.net. I'll leave a link to this full article down in the description below so that you can read as well. But this just gives some nice background on where 13Fs originally came from and some of the proposed changes and kind of logic behind them. So the Form 13F was adopted pursuant to a 1975 statutory directive designed to provide the Commission with data from larger managers about their investment activities and holdings so that their influence and impact could be considered in maintaining fair and orderly securities markets. Quote, monitoring equity holdings of large institutional investment managers is an important part of our regulation and oversight for the securities market, says SEC Chairman Jay Clayton. Today's proposal will update for the first time in over 40 years the 13F reporting threshold to a level that furthers the statutory goal of enabling the SEC to monitor holdings of larger investment managers while reducing unnecessary burdens to smaller managers. So the article then goes on to say, in 1978, when 13Fs were adopted, the threshold for filing the form was set at $100 million, and that's still what it stands at today before these changes were proposed. Since then, the overall value of US corporate equities has grown over 30 times, from 1.1 trillion to 35.6 trillion, and the relative significance of managing 100 million has declined considerably. The Commission and staff have received recommendations to revisit the Form 13F reporting threshold from a variety of sources over the years, including from the Commission's Office of the Inspector General. Today's proposal would raise the reporting threshold to 3.5 billion. So that's raising it from 100 million to 3.5 billion, like a 35x in the reporting threshold. Today's proposal would raise the reporting threshold to $3.5 billion, reflecting proportionally the same market value of US equities that 100 million represented in 1975, the time of the statutory directive. The new threshold would retain disclosure of over 90% of the dollar value of the holdings currently reported, while eliminating the Form 13F requirements and its attendant costs for nearly 90% of filers that are smaller managers. In addition, since the initial 13F thresholds were established in 1978, the Commission has added other data tools, including import. I actually don't know what that is. So the article goes on to say that there's no proposed changes basically to any other filings at this stage. So we haven't got any proposed changes to something like a 13G filing. So if you recall from the previous video where we talked about Monash Proprietors investment in Heritage Growth Properties, that initially came from a 13G filing. So there's no mention really of that here at all in terms of if you buy a certain percentage of a company, there's going to be any changes there. But this is quite a large change proposed to 13F filings. So what's my opinion on this whole thing? Basically, from my perspective, I would like as much visibility as possible. So the more investors that we can get involved in 13F filings, in my mind, the better. You know, they did mention that over 90% of the dollar value would be retained in 13F filings, but over 90% of the managers would not have to file. So that means that 90% of the money is in kind of the top 10% largest hedge funds. And, you know, this, by the very nature of large hedge funds, for individual investors like me who are looking to pick individual companies for the most part, the 13Fs of those large hedge funds don't tend to be particularly useful. So when I look at a 13F, I'm not looking to see, you know, what stock does an investor have a 0.5% position in or something like that, which many of the very, very large hedge funds or mutual funds will, that's kind of how they'll structure their portfolios. I'm looking for sort of high conviction investments. You know, companies where investors have 5, 10, 20, 30% of their portfolio in an individual stock. You know, if you look at someone like Warren Buffett's portfolio, he had something like 25% of his portfolio in Apple when he purchased it. It's grown to like 40% of his portfolio now. And that right there is much more useful than me seeing an investor with a 0.02% allocation to Alibaba or some other company like that. So for me personally, I want to focus on investors who have focused portfolios, because it gives me a much better perspective on what they have a lot of conviction on. And we're really only going to find that in the smaller investment filings. We're not going to find that in, you know, the Bridgewaters of the world or the Blackstones of the world, where they have these massive diversified portfolios. They have many different sort of product offerings within their business, where they'll have, you know, dividend portfolios and growth portfolios and technology portfolios and everything under the sun, which really kind of muddies the waters when we look at the 13Fs. You know, I want to focus on the likes of Monash Prabai and Guy Spear and so on that own 10 stocks and you know, have relatively low portfolio turnover and hold companies for a long period of time. That's really what I'm after as an individual investor. So I know there already has been a fair bit of backlash over this one, this proposed change by the SEC. So keen to hear your thoughts as well. You know, if I look back on the Guru portfolio series we've kind of started up on the channel over the last few quarters, we're going to lose a fair few people. So we're going to be losing Monash Prabai, we're going to be losing Guy Spear, we're going to be keeping Warren Buffett, we're probably going to be losing Charlie Munger, I think. I would have to double check that, but there's going to be a very high percentage of the names. So we're going to lose like 90% of the names from our 13F filings, and that just makes things, you know, whole lot less entertaining and, you know, a bit trickier to find info. You know, we can still get stuff through the 13G filings like we just mentioned. We can still get stuff occasionally through annual reports that these investors put out, but it really makes things a whole lot less transparent for individual investors trying to follow along with what people are doing, because cloning can be a great thing for your financial health. So those are my thoughts on the whole issue, and that's a bit of an update for those that haven't seen this news report already. So I hope you enjoyed the video, regardless of it being a slightly negative topic. So keen to hear your thoughts. Let me know down in the comments section below. Keen to have a bit of a discussion with you all there. But that's all from me today, so I do hope you enjoyed the video. Please watch some older videos over there if you would like. Hit subscribe over there. I think we're almost at 11,000 subscribers, which is very, very cool. So I appreciate your support for that. Keep an eye out for the subscriber stock picking challenge, and I will see you in the next one. Cheers.